Hello, I'm Brett Riley. I'm the Chief Risk Officer for Arch LMI, a mortgage insurer in Australia. I'm a Fellow of the Institute of Actuaries of Australia, but I'm also a Chartered Enterprise Risk Actuary. I gained that qualification in 2012 after I'd finished my fellowship exams.
Thanks, Brett, and welcome. Can you tell us a little bit more about your work in risk management?
Sure. My current position is Chief Risk Officer for Arch LMI, which is a startup mortgage insurer in Australia. So I have all second line responsibility for risk management and also compliance.
And do you have any other risk management credentials?
I do. I was the convener of the Actuaries Institute's Risk Management Practice Committee in Australia for 2.5 years, which I stepped down from recently. And for around about 5 years prior to that, I was also a member of that committee. Also, I'm a fellow of FINSIA, which is a investment management and securities industry body in Australia. And I gained that qualification in my first job when I worked in investment management.
Thanks, Brett. What are the main technical challenges of the work where your CERA credential helps you the most?
I'd say working in mortgage insurance, it's understanding the claims distribution. It's a very hard distribution to understand, and it can change over time. So it's a very skewed distribution. So most of the time, losses or claim levels are relatively low. But occasionally, normally in an economic downturn or a recession, those claims can be a lot higher. So understanding how frequently that can happen and how severe it can be is important. So I think understanding that distribution, but also understanding the drivers of the claims. So key drivers of mortgage insurance are macroeconomic factors. So things such as property prices and unemployment rates. Those tend to drive both claim frequency and also claim severity. Generally falling property prices lead to more claims and large claims, and obviously unemployment leads to people not being able to service their mortgages and getting into trouble and leading to claims. So understanding how those factors interact is important. And I think both the actuarial and the risk management training helps with that.
That's very clear. And can you tell us also whether the CERA credential helps you in facing non-technical challenges?
I think it does. Obviously the CERA qualification is a mixture of both quantitative and qualitative factors and how those support risk management. One thing I found useful is dealing with a range of stakeholders. Regulators, our prudential regulator here, APRA, is quite demanding in terms of governance and risk management structures, so having a solid underpinning there is helpful. But also dealing with a range of stakeholders. Helping communication plans, understanding different points of view. Sometimes when those aren't in alignment, that can be very helpful as well.
Yes, that's right. And can you tell us also what you see in the future? What are the biggest challenges over the next 5 to 10 years?
I think in risk management there'll be common factors that drive other areas where actuaries practice. So things such as disruption, changes in industries, new competitors, emerging risks from things like technology, cyber. Operational risks will continue to be important. I think specifically to risk management, one of the challenges will be understanding dependencies between risks. That was one thing that obviously came out in the financial crisis around 10 years ago, was that some of the weaker relationships between different types of risks in normal conditions don't necessarily hold in a stressed environment, and better understanding those conditions I think will be a focus.
Yes, thanks. And overall, are you therefore happy with your CERA credential, and do you use it in the office?
Yes and yes. So yeah, I'm happy I did the course. I didn't need to do it as part of my fellowship exams. I'd already finished that many years before, but I was interested in risk management. It was the credential that I wanted to support, so I'm glad I hit the books again and took the exam in 2011. And yeah, it does get some recognition. I think risk management is difficult because there are a lot of competing qualifications out there. There's no single body that owns the post-nominals, the credentials for risk management, but even though the actuarial profession is relatively small, it does have clout with a lot of people in industry, so I think it is appreciated.
So in just a few words, where do you see the added value from the CERA credential?
I think the understanding of the actuarial tradition. I think people it's obviously an extension of what actuaries offer. So what the profession brings in terms of independence, professionalism, technical rigour. And I think increasingly, that maybe we're not quite there yet, but increasingly people are understanding that it brings more of the business, commercial and softer skills that a good risk manager needs.
Thanks. And what do you see as being missing, or what needs to be improved within the CERA syllabus to make it sustainable in this changing future?
I think one of the things I mentioned before about risk dependencies, it might have changed since I studied it several years ago, but there was a strong focus on statistical approaches to modelling dependencies, things like copulas. I think continuing to emphasise or consider other approaches like scenarios or factor-based measures of dependency is worth considering as well, not just for non-technically minded people, but also supporting communication to non-technical audiences.
Thanks. And how do you see your interaction when you're doing your work with the more traditional actuarial practitioners in the more traditional roles in your company?
I think it's generally been pretty good. Certainly within our company we have an appointed actuary, which for those people outside Australia, it's a statutory role that is prescribed by APRA. So there's pretty clear defined boundaries and roles and responsibilities for the CRO, who's firmly a second line of defence person, and the appointed actuary. So we tend to work together quite well. I find interaction with people in more traditional actuarial roles within the group works well. You know, they understand what they need from me and vice versa. The one challenge I have sometimes found is maybe within the profession more broadly, people in traditional industry roles sometimes overlook the contribution that a risk management specialist who looks across industries can bring.
Looking across to other non-insurance fields in the finance industry or beyond, where could they benefit from a greater use of actuarial skills?
I think a lot of the areas actuaries are already starting to make inroads, and maybe it's a case of just increasing that penetration. Areas like investment management, project finance, data analytics obviously is a hot topic at the moment. But the one for me that I think has great potential is credit risk analysis. So a lot of the credit risk analysts within banks tend to be non-actuarial, and it plays perfectly to our skill set, the analysis of loss frequency, loss severity, and I think that will become very important with the introduction of the new accounting standard on provisioning, IFRS 9, where it's very much akin to IBNR provisioning within insurance.